Before you tell me that wigs have nothing to do with economics, let me point out that the global wig and hair extension market is valued at over $6 billion. China is the largest economy producing and exporting this product, with Chinese wig exports accounting for more than 70% of the global supply. Perhaps this is unsurprising given that China is the leading manufacturer of several industries, including those that many would argue are more important than others. Since 2010, China has actually seen its dominance as the world's dominant manufacturer start to wane, and emerging competitors may not be the economies you'd expect. You see, there are very few sectors you can name where China does not have at least 20% global market share of their manufacturing, and if you haven't noticed, that's a big deal for a lot of reasons. After saying that, the US-China is still the source of a larger proportion of the world's manufacturing output than all three economies put together, even though Japan and Germany are the second, third, and fourth largest manufacturing economies after China. Scaling manufacturing capabilities is an expensive and time-consuming process that is typically most successful in the private sector. Demand to expand is aided by government cooperation in the form of subsidies and tax breaks designed to encourage foreign investment, domestic manufacturing, and greater employment. As a result, it is unlikely that wealthier countries will compete with China's market share of global manufacturing efforts. India is undoubtedly a logical pick for a nation that could be able to challenge Chinese manufacturing. Despite having a sizable and young population, as previously discussed in economics explanations, India's GDP benefits greatly from its global services economy rather than manufacturing because of its English-speaking population, putting India's economy more in competition with economies like Singapore's rather than the much larger authoritarian rival in their backyard. For a long list of odd and economic insights, we are about to get into which economy is today's episode of Economic Oddity, about which dark horse might emerge as a great manufacturing economy over the next 2 decades. Mexico. In 1994, the North American Free Trade Agreement or NAFTA took effect, opening up a new world of possibilities for Mexico by removing trade barriers. This agreement made Mexican goods easily accessible to their neighbors in Canada and America, transforming Mexico's economy from one that was closed off to international trade into one with a sizable young population and a higher fertility rate than nations like Brazil, France, Iran, the US, China, Mexico, and even India and Nigeria. Believe that vying for manufacturing possibilities is a crucial step in ensuring that a large and expanding population has plenty of employment prospects. Large populations can be economically advantageous, but if you can't give that vast class of people jobs, this soon turns into a demographic nightmare. The necessity of diversifying trade partners, a reminder we have seen on full show in recent months for the last 8 years, motivates Mexico's development even more. Disputes over trade and import duties between China and the US, for instance, have boosted manufacturing within Mexican borders. While it's unlikely that Mexico will replace China's position as the world's top manufacturer of all goods, Mexico has much to gain by specializing in the production of a few key items like machinery and electronics in an effort to get the ball rolling in these efforts. Mexico has become increasingly desirable to a US that looks to reduce their dependency on trade with China. What does Mexico's manufacturing look like today? Well, for starters, because of its comparably safer and more secure regulator nations, the proposed United States-Mexico-Canada agreement aims at standardizing automotive industry labor wages, bringing the necessary regulation and transparency to economies like Mexico, where informal markets are responsible for an enormous amount of economic activity. Mexico offers businesses assurance that their intellectual property will be kept safe from theft. When importing into important markets like the US, Mexico also provides more affordable production options than China while significantly lowering transit times. After all, time truly is money, and this is never more true than when dealing with supply chains. The COVID pandemic's effects on global supply chains also helped Mexico overtake China as the US's top trading partner in 2021 after US imports from Mexico increased by 18.3% from the previous year, roughly reaching $390 billion. However, Mexico's appeal as a location for new manufacturing isn't solely based on China's drawbacks or its geographic location. Whether you believe it or not, Mexico's workforce now offers a level of skill and efficiency that is more affordable than China. In fact, unit labor costs in Mexico were comparable to those in China as early as 2014, and by 2019, manufacturing wages for some industries had dropped to 20 and were lower than their Chinese counterparts. Some of the largest firms in the world have been shifting some of their manufacturing activities to Mexico since shipping from Mexico is more affordable and efficient than shipping from China in many regions of the world, and shipping within the Americas can be up to 90% cheaper. Whatever businesses you inquire about, we'll learn right after our newest part, and what are the chances when you hear the term pyramids? For some of us, it's simple to conjure up pictures of ancient Egypt when we think of many things. For those who understood Aisosley's proofs more quickly than I did and did in fact think of ancient Egypt, what if I told you that the largest pyramids in existence lie hidden beneath a mountain quite the ways away? The pyramids of Cholula are located in Mexico and stand an impressive 66 meters high with its base measuring 400 meters wide. For me, Vegas brings back unsettling memories of Miss Susie's 10th grade geometry class. The church at the top of the pyramid, which was built by Spanish conquerors centuries ago, is what makes it so impressive. The pyramid was built thousands of years ago, but today it can be recognized by that fact. I imagine that when the Spanish conquerors came across the pyramid, they wondered, what are the odds? Because they said it in Spanish. Fast forward to today, where we don't make nearly as many pyramids. Who's actually moving some of their manufacturing operations to Mexico? See if any of these brands ring a bell. So could Mexico be the surprise competitor to rival Chinese manufacturing prowess in the decade ahead? Well, with a large, highly educated workforce that graduates 89 of the top 100 auto part producers worldwide, many would argue Mexico is already proving this. It may not be the strangest thing to see Mexico emerge as a leading manufacturer in the following 10 years, thanks to competitive labor prices and a growing population that rivals that of established manufacturers.